that's one of the more interesting dynamics, at least that I'm seeing and we're seeing across the industry, is that, consumer demand has remained healthy, despite all the craziness going on around us politically and economically, which has been, again, a bit of a surprise to me. The U.S. consumer, fairly resilient animal. They want what they want. And obviously the U.S. consumer, not a stranger to debt.
Zach here, and today's guest is Dan Ingle, the president and COO from usedcars.com, a platform sitting right at the intersection of consumer demand and dealer supply in today's shifting auto market. With millions of monthly shoppers and real-time insights into buyer behavior, Dan brings a data-backed perspective on how affordability pressures and inventory shifts are reshaping the used car landscape. So, Dan, thanks so much for joining me today.
Hey, thanks, Zach. Great to be here. Appreciate the opportunity to talk a little bit and discuss what's happening in the used car market.
So, to kick things off, tell the audience a little bit about your career journey into the auto industry, a little bit about yourself.
Sure. Very good. Appreciate it. So let's see. I mean, first off, just very grateful and fortunate to have the opportunity to work in an industry like we work in. Very dynamic, lots going on all the time. In terms of my start, dipped my toes into the auto industry back in late 1990s, 1999, as a matter of fact, starting in auto finance. I actually worked for a startup in San Diego called PeopleFirst. They were pioneering direct-to-consumer lending, which was eventually purchased by Capital One. Capital Auto Finance integrated them in. After that, I joined Kelley Blue Book to be part of the leadership team that was assembled to reinvigorate the then 80-year-old brand, and really to try and technology enable it and sort of bring the business and operations forward into the current environment. Very cool experience. It was like being part of an 80-year-old startup. So that was pretty interesting time to be there. I was there when Cox purchased KBB, and kind of was able to see how that helped shape the business for where it is today. While I was there, we brought things like the KBB Price Advisor to the market, if you're familiar with that. And then we also did the KBB Instant Cash Offer while I was there. And then, so the last part of my time with Cox, I spent traveling the world for them, and I was establishing KBB and Auto Trader out in international markets like China, Brazil, Australia, and up in Canada. After my time at Cox, that's when I landed at AutoWeb, where I am today. AutoWeb, I was recruited to be part of the executive leadership team to turn the failing company around after many years of decline. The year before this group arrived, AutoWeb lost about $40 million the prior year. Sort of with a great team around us, we brought the company back to cash flow positive with healthy margins. And then I was part of AutoWeb been taken private back in 2022, and that brings us to current day.
Really cool dynamic journey, and love the 80-year-old startup kind of KBB context. So today, you're roughly seeing 1 in 3 shoppers move from new to used. In your opinion, what's driving that decision beyond just the monthly payment shock?
Yeah. It's been really interesting to watch and see the dynamic happen, over time. But I think the big answer is affordability is the driver. You look at new car costs averaging over $50,000. Interest rates continue to be high. Now you've got many automakers also, increasing prices on their 2026 models as well, trying to pass along some of those tariff impacts. And then when you kind of compound that with the fact that I think it's the latest data I saw, I think it was like 23% of all new cars being financed at this point. The deal term is 84 months.
Wow.
That comes with an average payment now of $770, an all-time high. And then on top of that, you also have down payments falling at the same time to near historic lows. I think it's just over $6,200, I believe. That's the lowest it's been since 2022, I believe. So, lots of it it's very, very oriented around just the cost of new cars and the affordability crisis that we're seeing.
And what trends are you seeing in terms of like price bands or vehicle types that consumers are landing on?
Yeah, I mean the segments and the makes and the models actually tend to follow, typical new car shopping behaviors. You got SUVs, midsize and compacts, small sedans like a Civic, pickup trucks, obviously big. And when we analyze what vehicles the consumer researched and then expressed interest in versus what they ended up buying, a large percentage of those stay on brand. So they wind up, in their vehicle of choice, maybe a lower level of trim, just in a more affordable package. You also see consumers stay on brand, but purchase a model that is, for example, a step down from their initial intention. If you look at like a Chevy Traverse and somebody transitioned into an Equinox instead. And for those who aren't likely making the new to year switch, we do continue to see shoppers looking for that unicorn, $15,000, good quality, reasonable mileage, solid vehicle value out there.
How has shopper intent evolved over the past 12 to 18 months? Is affordability tightens, you have external pressures like rising gas prices and some global instability. How's that impact consumers?
Yeah, I mean, I think that that's one of the more interesting dynamics, at least that I'm seeing and we're seeing across the industry, is that, consumer demand has remained healthy, despite all the craziness going on around us politically and economically, which has been, again, a bit of a surprise to me. The U.S. consumer, a fairly resilient animal. They want what they want. And, obviously the U.S. consumer, not a stranger to debt. And we haven't been able to really tease it out on usedcars.com yet, but I've read a fair amount about the research is showing vehicle purchases becoming more of a need based, over the last year and a half or so versus a want based purchase. And I think the number I saw was like 75% of consumers reported need versus want. And I think that speaks to the fact that, people still need reliable transportation to get around, get to work, need a way to haul their families around, and affordability and pricing has just become an even larger driver of that decision. And the other interesting part, when you look at consumer confidence numbers, I don't know if you ever look at the University of Michigan study. They do their consumer confidence numbers on a very frequent basis. Those have been declining very rapidly. They're down like 9% year over year. And those numbers are now at pandemic era lows.
Wow.
And that kind of feels like the canary in the coal mine to me. Despite we're still seeing good demand, I think we could be seeing signs of trouble on the horizon.
So, what does the migration from new to used mean for dealer sales performance in 2026?
Yeah, I mean, I think it's gonna mean quite a bit to the dealers in terms of how they're thinking about their business. And I think a couple things that come to mind. Number one, they need to be prepared to support consumers through that shift. So how can they become a trusted advisor to the consumer and coach them that used is a great option. And I think obviously having a solid stock mix of used cars will also help give the consumer options that fit their product and pricing needs. And when you look at the statistic that's out there, look at dealership groups, in terms of their new to used mix. Usually they run about somewhere around 1 to 1. I think the average for 2025 was just under that, like 0.94, I think was the number. But what we're seeing is more dealers, more groups pushing beyond that 1 to 1 used to new mix. And I think I just saw the latest automotive news. They listed the top 100 dealership groups in used vehicle sales. And that saw, I believe the number was 31 groups surpassed that 1 to 1 average last year, up from 27 the prior year.
Wow.
And when you sort of look at that and sort of narrow the lens down on the publicly traded groups, 4 of the public traded groups are now more than that 1 to 1 ratio. I think you had Sonic leads the charge almost 1.5 to 1. Then you've got Lithia, Group One, and AutoNation all out there and sort of better than that or stronger than that 1 to 1 used to new mix.
And how should dealers rethink pricing, digital listings, or even F&I strategy to better align with this kind of new affordability driven shopper?
Yeah, I mean, I think it's, I think common sense from, from prior times tells us that, there really isn't a big change required there, but, they need
Mhm.
to price the vehicles to sell. Consumers today have more tools at their disposal to help them understand what's happening in the market and let them see, what competitive vehicles are priced at. The good news is you don't need to be the lowest price. I think you just don't be the outlier. And that will, get you in and get you exposure to that consumer and get you a chance to sell that vehicle. On the listings front, I think, the message there is get exposure everywhere you can. Having high quality imagery always important, continues to be important. Vehicle history reports are equally important as well for those shoppers that are transitioning from new to used, right? They're used to that brand new vehicle, not having to worry about vehicle history, and not even worry about repairs and worry about issues with the vehicle. If you can show them, hey, here, this vehicle's got a great history report on it, that creates trust in the vehicle, and that trust is really critical when we think about how to approach these buyers. And then I think the last thing that I would throw in is a little bit around lead handling. So, when
Mm.
a consumer expresses interest, speed to lead is more important than ever for these buyers. And for the dealership, it's you can get in there first, you can be first in line, build that relationship, as I mentioned before, be that advisor to them. Don't necessarily go for the hard close. These consumers may take a little bit more time as they make that transition. They wrap their head around, going from that new vehicle to that used vehicle. And so these buyers are going to need to be nurtured a little bit along the way.
This podcast is brought to you by Auto Manager, a complete dealership software platform. From inventory management and CRM to websites and marketing tools, Auto Manager helps dealers run their business more efficiently and close more deals. To learn more, visit automanager.com. Now, back to the show.
And kind of shifting gears to inventory trends in acquisition strategy, with off lease and fleet vehicles returning to somewhat of a more normalized level post COVID, how is that impacting inventory flow?
Yeah, I mean, I think we're seeing some relief, but the used car day supply is still under 40 days, about
Mm.
37 is the last number that I saw. So things are still tight. You've got, off lease 3-year-old vehicles that are, the most likely suspects for the new to used transition people. So not a lot of relief there. Thinking about from a consumer side too, many consumers are also upside down on their current vehicle, which creates a little bit more of a challenging environment for them to get out of those units and for those units to enter the used car market.
And are we heading towards maybe more of a balanced market, or are we going to continue to see demand outpace supply in some of those key segments?
Great question. But I think for me, given the pace of the post-COVID off-lease vehicles coming back and entering the market, that's being sort of countered by the growing new car affordability challenges, for which I don't see an end in sight. So I'm not sure I see that balance coming into the market anytime soon. Likely a little bit relief, but I wouldn't say we're going to reach any sort of balanced equilibrium anytime soon.
So, what should dealers be prioritizing right now when it comes to sourcing inventory, whether it's auctions, trade ins, direct to consumer?
Yeah, there's lots of different channels that dealers can use to acquire that inventory and source the inventory. And I think the key is to follow a more of a multi-channel acquisition approach with a bit of a balanced diet across several sources. Good units can be found across many channels as long as you've got the processes and the discipline to manage it in that way. Auctions can be okay. However, the more in-demand units are often scooped up before they make it into the lanes. Then you have auction fees to contend with. Trade-ins, always a good source. However, your trade-in process needs to be tight. You need to be really in control, because you're not really in control of that volume when it comes in. Service lanes, another great place to go look, solid channel. to pursue. Again, however, you need to have a consistent and clean process in order for it to yield results for you. The last couple I've put out there in terms of sourcing, Facebook Marketplace, great place to source vehicles from, as well as products out in the market like the KBB Instant Cash Offer, a way to bring consumers into your store to dispose of their vehicle.
Are there any specific vehicle categories, maybe like late model or CPO eligible, where you see the biggest opportunity this year?
Yeah, as far as the new to used transition folks go, if you're a franchise store, obviously clean late model on brand vehicles are going to give you the best chance of success to capture those deals. As far as vehicle segments go, I think stocking a good mix of those late model vehicles across vehicle segments are going to give your shoppers options, and they're going to keep them on your lot.
In used EVs, they're becoming more and more prominent. What are you seeing in terms of shopper interest and maybe conversion around like used EVs?
Yeah, it's EVs have been really interesting, especially over the last 12 months or so, and I think we're definitely seeing an uptick in consumer interest in EVs on usedcars.com. Was recently reviewing some analytics with our head of data science, and in absolute numbers, we're seeing steady increase in people impressions of EVs through Q1. We also though saw a big impression increase about mid-April. It's normalized a bit. However, overall impression share definitely trending up for EVs on usedcars.com. As far as conversions go, I mean, it takes a little bit of time for that conversion to mature. So we haven't really seen too much yet in terms of a change in conversion rates. However, we're keeping a pretty close eye on it.
And another EV question, are affordability and depreciation making used EVs more attractive, or are there concerns like, hey, what's the battery life? Are there things still holding buyers back in the EV world?
Yeah, I mean, I think from an affordability perspective, it's definitely helping. There's a glut of off-lease used EVs right now that are out there. So prices, have really aligned around that excess supply. The lower costs, now closer to their ICE counterparts, have definitely made them more attractive to consumers. And then when you add in, the latest high gas prices into the mix, those EVs can look pretty good to a consumer. But on the other side of it, battery health and battery life still a concern for many consumers. However, the technology to quantify battery health is much better now and is really helping people to understand that aspect of a purchase, and that hopefully helps ease the fear a little bit. As well as there's some pretty strong battery warranties out there as well that help to make consumers a little more comfortable with a used EV purchase.
And how should dealers approach pricing, merchandising, used EV inventory different than the ICE vehicle counterparts?
Yeah, for pricing, it's like any other vehicle you have. Price it to market. Be aware of what's for sale in your area, and really just be in that range. Again, you don't have to be the lowest price to win the deal. With EVs, your product knowledge and the trust you can build with consumers also goes a long way. That product knowledge piece being really important because the buyers who are coming in to purchase used EV, they're usually a little bit better educated on the product itself, and so your salespeople need to be trained in order to have that communication and be able to make the consumer aware of what they're buying. From a merchandising perspective, similar rules kind of apply here too. Plenty of high quality images, market-based pricing, but also showcasing your consumer ratings with the consumer and with those buyers will also help. They really want to know that they can trust your dealership, and trust is kind of the name of the game there. Also highlighting vehicle range to help with comparisons. And then if you've got it, tested battery health along with the extended battery warranties also become very important and help you in terms of merchandising those vehicles to the shoppers.
And what do you think are the biggest opportunities in terms of merchandising used inventory in the second half of 2026? So as we get to the later part of the year, what do you think are some opportunities for dealers kind of listening to this podcast and some of your thoughts on the market?
Just for EVs, you're talking about for the just used market in general.
Used market in general.
Yeah, I mean, I think the back half of the year, I don't think it'll be tremendously different from the first half of the year. I think we're still waiting to see the impact from the war in Iran, right? What's that going to do to the market? And as I said earlier, I think we're still going to have tight supply. We do have some more off-lease vehicles coming, but I think the number of consumers that are running into this affordability crisis are going to sort of create that pinch so that inventories are going to stay tight. But I don't see any major shift happening second half versus first half.
And the last segment of our podcast is rapid fire. So I'm going to ask you three questions and kind of want your quick, rapid fire thoughts on these. So
Excellent.
first one underrated vehicle segment dealers should be stocking right now.
Okay, this is a good one. So I think there's a good velocity play out there in the 3 to 5 year old sedan range. So think Sonata, Fusion, Malibu, Mazda 6. They really don't receive much love in the market, but still widely purchased. This is a vehicle that you can buy cheap, price aggressively, and turn fast.
Nice. Biggest mistake dealers are making in today's market from your view?
I'm gonna pull from my old pal Wayne Gretzky here and what he used to say, and that's not skating to where the puck is going. I think this used car shift, this is not a short-term ripple in the matrix. It's here to stay. The other thing that I think about in this space is really not meeting consumers where they are in terms of how they want to shop and how they want to buy. Things like timing and messaging are everything with these shoppers.
Lastly, a data point from usedcars.com that has surprised you recently.
So I mentioned earlier that I was talking to our head of data science just the other day, and the one data point that really shocked me, I need to go dig into a little bit more, but in mid-April, the impression volume for EVs doubled
Interesting.
mid-April. So that's probably maybe our indicator too about you're asking about the potential and growth for EVs in the market. That could be a little bit of again, a canary in the coal mine telling us, hey, there's some things coming towards us.
Wow. And, just being in San Francisco resonates a little with me. I've seen some gas stations at $8 a gallon for gas. And I recently leased a Mercedes EV, and it's been nice not having to go to the pump, during
Yeah.
these kind of price points.
Yeah, yeah. I went to the dark side a little while ago too and bought a full EV. And now with gas prices where they are, I'm kind of glad I did that.
Nice. Well, Dan, I really enjoyed our conversation. You're so knowledgeable. You have so many data points just at the top of your head. I think the audience has definitely enjoyed this episode too. If a dealer's listening, they want to contact you or get a hold of usecars.com or find out more about your offering, how should they approach that?
Yeah, just go to usecars.com. There's a dealer section on there, and you can contact us there.
Awesome. Well, thanks again, Dan, for joining me on the podcast today.
Excellent. Thanks, Zach. Appreciate the opportunity.